What if I told you there's a less popular real estate investment trust that has just as good, if not better, of a portfolio than Realty Income? On top of that, what if this REIT also had a larger starting dividend yield? This might just be the case, and we are going to talk about it in today's video. Ticker symbol NNN, or National Retail Properties Inc., is a real estate investment trust that invests in single-tenant properties mainly in the retail industry. Sounds a lot like Realty Income so far, doesn't it? Triple N acquires, owns, and manages properties leased to tenants in various industries, including things like the automotive services, convenience stores, restaurants, drugstores, and fitness centers, to name a few. Some of the reasons why National Retail Properties could be a great buy is, for one, they offer very steady dividend payouts. Now, National Retail Properties is unfortunately not a monthly paying dividend stock like Realty Income, and one of the main reasons why investors consider REITs like National Retail Properties in their dividend portfolio is because of the consistent payouts. Triple N has a history of providing steady dividend payments over a long time period, which is attractive to income-seeking investors. As of March 2023, National Retail Properties' dividend yield is somewhere of around 4.5% more or less, which is much higher than the average yield of the S&P 500 and even higher than Realty Income. National Retail Properties has also had 33 years of annual consecutive dividend increases, which is great because as a dividend investor, you not only want to look for long-term dividend payouts, but increases are a bonus on top of that. National Retail Properties also has a strong balance sheet with a debt-to-equity ratio somewhere around 0.84, which is below the industry average. Additionally, National Retail Properties has a low payout ratio of 75.5%, indicating that it retains earnings to invest into growth opportunities. Furthermore, NNN has a high return on equity, a ROE of around 8 or 9%, which is much higher than the industry average. Also, National Properties offers a diversified portfolio of real estate properties, around 3,400 properties totaling 35 million square feet of ownership. The total enterprise value of National Retail Properties is $12.1 billion. The long-term net leases with average remaining lease terms of around 10.4 years. So there's a lot more money that is due to come in and increases on top of that. And also, for a REIT, one of the most important things is the occupancy. National Retail Properties has around a 99.4% occupancy rate, which means pretty much all of their properties are full. Now, I know some of you guys might be saying, well, National Retail Properties looks pretty good so far. The dividend of around 4.5% to 5% starting sounds great, but how much total return has National Retail Properties seen compared to things like the S&P 500? So the total return comprised of share price appreciation plus dividend yield looks as the following. Over the 1 year, minus 0.1, 5 years, 6%, 10 years, 8.7, 15 years, 10.2, 20, 11.7, 25 years, 10.7, and 30 years, 11.8%. Now, comparing that to the S&P 500, which is pretty much average right around 7, 8, 9%, National Retail Properties is actually giving off a bit of a higher return overall. Breaking down National Retail Properties' entire portfolio, they have a lot of recession-proof properties under management. Things like convenience stores make up 16.5%. Automotive service, 13.7%. Restaurants full service, 9.1%. Restaurants limited service, 8.9%. And there's family entertainment centers, 5.9%. Health and fitness, 4.9%. Theaters, 4.3%. RV dealers and parts stores, 4.1%. Equipment rental, 3.1%. And automotive parts stores, 2.6%. So as you can see, the biggest majority of their portfolio makes up of convenience stores, which are quite recession-proof. Now, out of this entire portfolio, there's certain areas of the portfolio that probably are higher quality and more recession-proof than others, but overall, the entire portfolio and the names that they lease to are corporate grade and high quality. For the dividend growth investors out there like myself that absolutely love Realty Income, I mean, I personally own over 1,200 shares of Realty Income. National Retail Properties is also slowly becoming a larger and larger portion of my portfolio. I personally love the real estate sector and I want more and more exposure to it over time. And with National Retail Properties' steady dividend payments, strong financials, their diversified portfolio, and exposure to strong industry tailwinds, make it a great buy, in my opinion, for income-seeking investors that also want to see the overall value of their portfolio grow over time. But I want to hear from you guys down below. Is National Retail Properties up there with any of the other high-quality REITs in your opinion? If you enjoyed this video, make sure to please drop a like in the video and subscribe for more. Thanks again as always, and I'll see you in the next one.